Hello, everybody. Welcome back for another video. Hope you're all doing well. Hope you're all having a fantastic day. And without any further ado, let's jump right into it. We've seen, it's been like 3 days. However, there's like a little bit of optimism that has kind of rushed back into the market. Apparently, the outlook and things don't seem as, I don't want to use the word depressing, but they don't seem like they did towards the middle of January, at least. Very popular news right now. This is floating around. For some reason, people needed this kind of clarification. I do adore the cryptocurrency space because a lot of people continuously talk about how terrible these organizations are. And then the moment they say one thing good about the cryptocurrency space, everyone completely falls all over them and they talk about how amazing they are. According to JP Morgan, the downward pressure on Bitcoin's price has eased as apparently profit-taking from the Grayscale Bitcoin Trust has largely ended. We had that news about 4 or 5 days ago. I believe it was on Twitter from the people from BlackRock who said that it looks like a lot of the selling pressure has largely dissipated. They expected, some companies expected more and some expected a lot less as far as what Grayscale had to quote unquote get rid of. They had, I saw people asking me on Twitter as well why this was happening. For those of you, I guess, who missed those videos, it was the topic of like 3 or 4 videos. Maybe, people miss videos. The main idea is that Grayscale has a Bitcoin trust and not, so they also now have a Bitcoin ETF. The issue is that people, when the ETFs launched, began to sell from their Bitcoin trust. And when they sell from the Bitcoin trust, Grayscale is obligated to sell on behalf of their clients. But the problem is that what they're selling is actual Bitcoin. So the more of their trust that got sold, as people were like, the ETFs look more attractive, they were selling off pieces of the trust, which meant they had to sell the actual Bitcoin that was related to the trust. The really weird issue is that for some reason, Grayscale was selling their coins to Coinbase as opposed to selling it over the counter, which amounted in a massive amount of selling pressure, which apparently took place nearly an hour or 2 or a couple whatever during that day when the ETFs first got started. Remember when we got news, I remember that morning, that the ETFs were live and like ready to trade? Bitcoin went from 46,000 to 49,000 over the course of an hour because of this like additional buying pressure that was happening. And then instantaneously we fell back down. Apparently, allegedly, I don't know how much I believe of this, but a large portion of it had to do with Grayscale having to sell off their Bitcoin nearly immediately because people were leaving their trust quickly to throw money into these ETFs that had a much lower fee as well. GBTC, which was the name of their trust, witnessed outflows of $4.3 billion since the conversion to a spot ETF 2 weeks ago, beating JP Morgan's estimates of around $3 billion US. Therefore, profit taking on GBTC, they say, is largely complete. JP Morgan analysts led by Nikolaos Panigritsoglu, it's a long last name, Panigritsoglu, wrote in a note, according to analysts, the price of Bitcoin has fallen by more than 20%, thanks a lot, in the last 2 weeks following the approval of spot ETFs in the United States. According to analysts, GBTC investors cashing out their profits caused a decline in Bitcoin's price. Thanks a lot. But the worst apparently seems to be over. I mentioned that before in another video, same exact thing. For those of you who also missed that one, we had news that it was like very cold in like a lot of places around the world, winter, right? However, it was excessively cold in Texas, in a place where it is not normally cold. And the issue is that it got so cold and so many people moved their cryptocurrency mining facilities from around the world just into Texas that when it got really cold, 33% of Bitcoin's hash rate fell down, stopped working, was no longer producing. That is a gigantic red flag. The amount of stuff that we continuously hear about how decentralized we need to be, if it got cold in Texas and 33% of Bitcoin's hash rate fell down, stopped working, wasn't in use, that's bad. We need extra decentralization around the world. The same exact thing, hear me out here, the same exact thing for Grayscale having, you cannot stop institutions from having so much Bitcoin. But the problem is, and I say problem lightly, is that so few people who are in the crypto space have paid attention to what Bitcoin is and instead began to buy a bunch of other crappy coins that I've been trying to warn people about for the last 8 years. And then you also have a bunch of other people who are not in the cryptocurrency space who've been haven't wanted to enter the crypto space because of how tribal people can be or how intense people can be in the cryptocurrency space. And then what ends up happening is that we have 15 companies, 15, who absorb the vast majority of all the Bitcoin that there is, leaving normal people around the world with fragments of Bitcoin. We get an ETF that the market has been asking for 10 years. And one company sells off some Bitcoin and the price drops by 20%. I can only hope that at least some of those coins, while the price was lower, that normal people were buying up fragments of them. It makes a lot more sense for 250,000 people to have absorbed a lot of that Bitcoin as opposed to it all going back to one other company again. However, it appears, according to JP Morgan, that the worst seems to be over. However, they warned that if Grayscale's Bitcoin Trust's 1.5% fee is not reduced soon, the fund could experience sustained outflows and lose market share to rivals. No one knows why they've done this. The fee for the fund, for some reason, is the largest in the entire industry. I've mentioned before, you will normally find ETFs, sometimes index funds, sometimes mutual funds, that will tend to have a fee of 0.9%, 0.8. Some of them have a 0.35. For all the Bitcoin ETFs, they're anywhere between 0.12% to 0.35. They're very competitive at the very beginning to make sure that they get anyone that they can into their fund. 1.5% is a losing number, and we can only assume that Grayscale knows how to count. So why would they have made sure that over the course of a multi-week period that their fund's percentage was so high only to get people to sell? This is why I always say, this is not substantiated, I cannot say with any certainty, but something along the lines of price manipulation is definitely there. You as a company would wonder, why is no one buying our fund? Why are people selling from the other fund? Why is no money or a lot of not money moving into our new fund that has a 1.5% fee? It doesn't make any sense. You would make it around or just a smidge lower than what BlackRock has to make sure that you at least get a portion of their pie. But over the course of multiple weeks, something's up. We'll probably never know what. Over the course of multiple weeks, you see the price of Bitcoin is falling because of you. You don't have anyone entering your ETF because of a 1.5% fee, and any Bitcoin that they did sell was being sent to Coinbase. What? Like, what exactly is going on? So in situations like this, I simply assume that Them and some of their friends behind the scenes were trying to lower prices as much as they can, as we are still to this day getting analysts who are predicting a 300,000 plus Bitcoin price next year. Not sure how often a lot of you are on Twitter. I don't remember this person's name, but there's always a lot of analysts who are posting these things. The new thing now is to post the entire stretch of Bitcoin's lifetime with movements during the bull run. So you'll see, like, in the very beginning, there was barely any movement, and you'll see like these, like, I don't even know how to explain, like the chart's doing like a swoop kind of. It goes up, it goes down, it goes up, it goes down, it goes like that kind of thing. And people are now posting these things where they're showing the beginning of 2024, and they have like a finger that says like, we are here. And it shows how much higher that is supposed to go or going to go. And most of the charts tend to lead to like the very beginning of 2025. And for some reason, their charts are still all pointing at this one in particular. The one that's in my head was 300,000 plus by the beginning of 2025. So we know that Grayscale and JP Morgan and all these other companies have similar numbers. We've seen some of their charts before. We've seen the analytics. We've seen plans B, yada, 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 yada. You get it. And they all have these high numbers. So I would assumption this was all done to lower prices so that some other accumulation behind the scenes can happen. But apparently it was not directly for their fund. According to analysts, the recent launch of spot ETFs in the US has added a new layer to Bitcoin price discovery, bringing it in line with traditional markets, especially equities, where ETFs are quite prevalent. They said, while on the face of it, the launch of a spot Bitcoin ETF means greater fragmentation, in practice it will increase the market depth and liquidity if ETF experience in traditional asset classes such as stocks is a guide. In other words, we expect the emergence of spot Bitcoin ETFs to make the Bitcoin price discovery process more efficient rather than less efficient. Grayscale's BTC ETF appears to have two competitors, BlackRock and Fidelity, which have attracted $1.9 billion and $1.8 billion in inflows respectively so far. Both have much lower fees on only 25 basis points without deductible compared to 150 basis points for the GBTC, end quote. No one knows why. No one knows why, except for the people from Grayscale. Maybe it's some kind of mastermind thing. But yeah, a lot of the market is quite happy that they've slowed down and or stopped. I'm still giving it until the end of February, as I mentioned before, simply because that seems like enough time to have passed by to see if our price goes up, continues to go up, and exactly where prices might be. You know, the end of February, beginning of March is a really good time frame, especially as March will start the rumblings. You will see it. We'll start the rumblings of the halving frenzy, which I personally have been looking more forward to than anything about an ETF for a very long time. That's the JP Morgan apparently says that it looks like Grayscale might be done selling. If that is true, and we get that same buying pressure that we did before, things could be really good for everyone in just a short amount of time. That's that news. And yeah, let's move on. Also in, I don't want to say popular news, but so remember how I told you that as we get closer to the halving, as we see prices rising, as this optimism re-enters the cryptocurrency space, because we didn't have like as much pessimism as I hoped we would not. But now that we're getting closer to the crazy bull run mega market kind of thing, every coin and their mother is beginning to pop up talking about their new updates and upgrades. This is usually done close to the halving. As prices move up, people also want that momentum to stick, as people then go, I should buy this coin because the price is there and they have an upgrade and they have an update kind of thing going on. So Polygon Labs, a developer of Ethereum scaling solutions, is set to launch their what they call a groundbreaking AG layer protocol next month. That is AGG layer. This innovative protocol aims to bridge the gap between various blockchains, providing users with an experience that feels like a single chain. Does this sound familiar? It's because we just had news 2 days ago that Ripple is doing the exact same thing, or excuse me, Ripple X is doing it for the XRP ledger as they create an Ethereum virtual machine. We had news, it's been over a month now, about IOTA. IOTA is also creating an Ethereum virtual machine. We had news 2 months ago about Cardano. Cardano is also creating an Ethereum virtual machine. Every single coin is doing the exact same thing. I think Dogecoin is also creating one as well. It's meant to basically merge them in a way to Ethereum so that there's more ease of use. If Ethereum is and continues to be the largest and most used blockchain along with Polygon, people want to be compatible with it because it makes your blockchain seem lightly more, not competitive, but like attractive as far as building something on top of it. If you decide you want to move value and or move projects on a blockchain that does 5,000 transactions per second comparative to 15, therefore you would use the EVM on that chain to move things a lot quicker and have lower fees, what have you. To address the fragmented state of blockchain landscape, Polygon Labs aims to create a unified and highly scalable network that often improves, user experiences and enhanced operability as well. In a recent blog post, Polygon Labs introduced its AG layer solution, which leverages zero-knowledge proofs to aggregate data from multiple blockchains. The primary objective of AG layer is to enable developers to seamlessly connect between both Layer 1 and Layer 2 blockchains, effectively merging them into a cohesive and interconnected network. This was a really big thing talked about back in 2016, 2017. A lot of it didn't, not that it didn't work. People just kind of stopped talking about it as people became more tribal in the crypto space and everyone kind of worked in their own corner. But as we've seen, a lot of blockchains aren't doing well, and this is not Polygon. Just for those of you who are, Polygon is doing excessively well. Other blockchains have realized that they kind of, in a sense, have to bend the knee to Ethereum if they want to have any type of long-term usage and or value. So this is why we're constantly hearing that all the chains are playing nice now and trying to work together to make one large, cohesive, interconnected chain that always does all these things together. And the idea is it says it somewhere around here as well. They basically want you to be able to use a blockchain without knowing that you're using another blockchain. It's kind of similar to you sending an email. I don't know if you've heard the idea before. Like when you send email, there are a whole bunch of like complex processes that happen behind the scenes, but you don't have to deal with any of them. You simply write, you click send, and it bounces between a bunch of servers, between a bunch of different things and goes where it needs to go, as opposed to you having to like click here and do that and add that and wait an hour for something to transfer. That's kind of the general idea. So yeah, Polygon Labs identified the current state of blockchains as siloed and lacking interoperability, resulting in suboptimal user experiences and scalability limitations. If you've ever tried to swap coins or move coins from one chain to another because you have to do it because you need to put gas on a chain, or it's all very convoluted. It's still very like 2013, 2014, it becomes quite cumbersome as you're dealing with a lot of these projects. So cool. Polygon has announced that they've joined the fray for this all-in-one chain interoperability kind of upgrade thing. No date as to when this is going to happen. I can only assume we're going to get more news about this as we get closer to the halving, as every other project is going to then announce again that they are doing all of these things, because that's just how the market always works as we get closer to the halving. But Polygon is one of the most used chains on the planet, so I know that they'll be doing just fine. That's the Polygon news. And yeah, let's move on. Sure, why not? This was, as you'll see in a moment, incredibly popular news. We're getting a lot of like fair value news as to how much something should be worth. And this one kind of took the cake because this news was all over the place. Something called the Athi and Mitch Nick, that is the name Mitch and then Nicholas slammed together into Mitch Nick, fair value calculator for XRP, shows that the crypto asset would be valued at over $5 a coin with a volume of 50 billion US dollars. The XRP price has traded below $1 since December 2021. To be fair, the SEC is a ravenous beast who has not let them go. With the fifth largest cryptocurrency locked between 30 cents and 90 cents for the majority of the past 2+ years. It's definitely been longer than that. However, the famous, I haven't heard of them before, and I had to like find them online. However, it says the famous Athi and Mitch Nick fair value calculator suggests that XRP is still grossly undervalued and could be worth $5 based on certain metrics. To be fair, a lot of coins are really undervalued. We are in a thriving, relatively new market. We have not been around for 50 years. We've barely been around for 15 years. And what we are experiencing is a large amount of price manipulation on levels that we cannot ourselves begin to understand, simply because one of the core ideas of crypto is that there's an egregious amount of growth left for our ecosystem. In the idea of growth, there also comes money. And when you talk about coins that are being used by governments and institutions and corporations that are being mined by them, Bitcoin is clearly undervalued regardless of how much selling Grayscale has done. We've seen before that Bitcoin's fair value, for those of you who missed this, based off of the trillions of dollars that just flow through its market. Nonetheless, the millions to 150 million people plus that use it every single month should be well over $100,000 right now. Same exact thing goes for the most used blockchain on the planet. It is nonsense that Ethereum hit $4,800 before, is being used more than ever, has more blockchains connecting to it, has the entirety of the, what do you call it? The, I keep thinking EVM. The Enterprise Ethereum Alliance, all using Ethereum as well, and then its price just happens to fall as low as it currently is. The same exact thing would then apply to XRP. We know that XRP is being used by dozens of companies around the world. Also, don't forget the 13 countries that we know who are using it to have the rails for their central bank digital currency. So, of course, all these things are undervalued. And even when we do experience a bull run, it is not the entirety of where coins' prices should be or could be at any given moment, but we are ourselves, for those of you who don't know, sorry to break it to you, we are wrapped up in a literal gigantic tug of war between about 15 companies, a couple 100 million people, and the other 8 billion people who aren't paying attention, where everyone's trying to get as much as possible, while these companies are making sure that they use whatever tactics they know to lower the prices of these coins to accumulate them at a much lower price. It just makes a lot of sense. All of these coins are undervalued. Introduced in 2018, the metric is based on a research paper released by the then Stanford professor Susan Athi and Stanford MBA candidate Robert Mitchnick. The paper sought to assess XRP's true value, arguing that the cryptocurrency was undervalued. Following the introduction of the research paper, developers built a calculator that adopts the basic parametrics. I'm tired of reading this. Like, I think you get it. I can usually tell when I'm tired of reading an article because it keeps going. Like, I'm you can't see like the little like slidey thing on the side. I'm 1/5 of the way down. And I can usually tell when I'm tired of like saying something because I stumble over my words too much. I think you get the generalized idea. This was incredibly popular. All I could find were like photos in some articles that these people had written on Medium. Apparently they are super popular within the cryptocurrency space and also the Ripple/XRP space as far as like price predictions and saying where things should be. So cool. Wonderful. We'll see what ends up happening. A lot of the price predictions have kind of slowed down a bit, as you might have noticed, since Grayscale went on a selling spree. But we'll see. Well, we will see them picking back up once again. The moment we get over like a $55,000 Bitcoin, everyone and their mother is going to be talking about exactly how high the market should be. That's the fair value of XRP news. And yeah, let's move on. Also in popular news that I cannot get away from, in anticipation of the potential approval of a spot Ethereum ETF, Hester Peirce, a commissioner with the US SEC, has reiterated that the regulator has learned from their past mistakes, signaling the product's emergence may be smoother. So one, for those of you who do not know, Hester Peirce is probably the only person with a soul in the SEC. She's been telling us for about 4, 5, 6 years that she has basically said yay, yes, to every single spot Bitcoin ETF that should have been approved, and they were all stomped out, negated, said no to by Gary Gensler every single time. She's gone on the news, she's gone on CNBC multiple times basically saying, I don't know why they keep saying no to a spot Bitcoin ETF. There's nothing really stopping us. These ETFs are no different than anything else. She never said price manipulation, but you know she was definitely thinking it. For some reason, everyone is hyper fixated now on a spot Ethereum ETF, and I cannot for the life of me figure out why. We waited so long for these Bitcoin ETFs, and now everyone has simply moved on to the next brand new shiny thing in the room. The most recent news that we had about 2 days ago is that I think 2 or 3 applications, I believe it was 2, were not denied, but delayed once again, which means that we will now have to wait anywhere between, I believe, the end of April to the beginning of May before we receive a proper answer from the US SEC, which now has a lot of people very excited that sometime around April or May, we will receive approval for a spot Ethereum ETF. I tell you, as a friend, please don't hold your breath. This is the same exact thing that we had before for the Bitcoin ETFs. We were told there's no real thing that's stopping them from happening. Over the course of 10 years, they were all stopped. If we end up getting one, whoop-de-doo, absolutely incredible. If we don't, the market will continue and Ethereum will do just fine. However, the conversation has shifted in this manner that everyone's now talking about it, and Hester Peirce felt the need to come forth and say exactly how she's feeling about the exact same thing. Earlier in January, the SEC approved 11 spot Bitcoin ETFs to trade in the United States. Behind this celebrated milestone was more than 10 years of pursuit of the investment product, with the regulator notably rejecting several applications from, it's all they did. It's literally all they did over the course of 10 years. Riding on this history, many in the industry are now speculating on whether Ethereum spot ETFs might suffer the same fate as Bitcoin, that is to say, waiting 1,000 years to get one. Per Hester Peirce's position, the delays recorded in the approval process for crypto ETFs are now long gone. Cool it. Like, I don't care for optimism when it comes to this kind of thing, because you can't say that after 10 years the SEC has learned when you were literally the only person who was on our side. And apparently the commission will approach Ethereum ETFs with a very different strategy. One of the major turning points, yada, yada, yada. Apparently, once again, we keep hearing that because Grayscale won their lawsuit that this is the only reason why we actually have spot Bitcoin ETFs, which makes it even worse. Which makes it even worse as to why Grayscale was selling and did not lower their fee. It's because of them that we have ETFs, and they're literally just like throwing garbage at theirs, and subsequently the garbage is also being flung in our faces as well because of them. The asset managers sued the SEC, and then Grayscale won the court case. Court ruled in favor of Grayscale. When asked by Coinage, someone named Zach Guzman, whether a court case might be required before the commission approves a spot Ethereum ETF, Hester Pierce said, and I quote, "That's not how we're going to do our approvals. We shouldn't need a court." You should not. No, you should not. "We shouldn't need a court to tell us that our approach is arbitrary and capricious in order for us to get it right." But you did. Not her, but the rest of them. And even, I don't know if you saw it, and it makes me nearly shudder to say it out loud. I don't know if you saw the actual vote for an ETF, like for the 11 Bitcoin ETFs. It was 3 yays and 2 nays. There were still 2 people in the SEC who, after all of this, still said no. We were literally a Gary Gensler away from once again being in the same exact boat that we had been in the last 10 years. So, as you might have imagined, this has caused optimism in the market because she says it won't be as difficult as it was before. I have a feeling it will be. We've seen light favor from the SEC regarding Ethereum before, but it hasn't been like putting them on your shoulder and parading them around the world. It's been like they didn't do as many bad things as other coins. The SEC admitted before that Bitcoin is not remotely in their jurisdiction, as they claim that it is a commodity, but they still waited a decade to give it a security. So as Ethereum has also received the same tag of commodity and not security in some of the members of the SEC's eyes, the only thing that will really work is if by the time we're like 3 weeks away from a potential approval, is if we start hearing that the Ethereum ETFs are listed on that website again, like, the one, like, where it's like kind of like a air quote done deal that they're going to be approved. And if we end up hearing from a bunch of like fund managers who start making like Ethereum commercials, same as, hindsight's 2020, and this is what I was saying before, when those companies, like those 3 companies were making Bitcoin ETF commercials, I was like, they know. You don't spend millions of dollars to make like these like clean commercials to get rejected. So they knew well before it was released to the actual public, but cool. Hester Pierce says it won't be that difficult this time. No word on if the future ones are going to be approved. I say they're not going to be because they have a terrible track record. And the same as, who said it? I think it was Garlinghouse a couple of days ago. There is zero indication that when Gary Gensler is gone, that the SEC is going to run smoothly, because as far as we know, every company in the US hates working with the SEC, and the only lightly transparent one has been Hester Pierce time and time again, so golf clap for her. I do think that's going to do it for this video. I do hope that you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See